Hi traders, it's Roberto. This is a tutorial for Pro Traders Workshop. This is a technique that I found out that many of these traders that compete in these contests, they use a strategy and they win the contest and sometimes at astronomical numbers. It's insane, 1,000% in a month. And they're way above the head of the crowd. So I'll show you a technique that they actually use. And this is one using a Bollinger Band. So um, when you know the trend has been established, and we're looking at the euro yen on a 1 hour chart. Okay, so here is the trend line break. We also had divergence on the 1 hour chart. So there's divergence here, and swing points are higher. So we know the overall direction of the market. It's a downtrend. It's obviously qualified. It's broken trend line. We have divergence on the 1 hour chart. So instead of just taking one trade and maybe one lot or a mini lot and staying in that trade until it's finished, what you do is you scroll to the 5-minute chart. Let me just go to that area. See, that's highlighted, okay? And what you do, that every time it hits, here's the sell-off, right? And this is the trend line break. It breaks below the middle line on the Bollinger Band, and you enter a trade. So that would be your first trade. So you keep that trade open. You don't exit that trade. But every time it hits the middle or the upper Bollinger Band, you enter another position. So you enter a position there, you would enter a position there. Every time it bounces off that level, you just keep on entering more positions, and then you start moving your stop losses from the initial to break even, break even, break even. So you're putting as price goes lower, or actually when it rallies, you enter a position, and when you're in profit on this trade, in this case, let's say on this trade you're up 16 pips, you immediately put a break-even stop loss. So you have essentially reduced your risk to zero. Okay, you have multiple positions, you're over leveraged, but you have on each trade you have a break-even stop loss. So even if this thing just turned around and went north, okay, let's say it just took off here, you wouldn't lose anything. Okay, so that's the strategy. As long as, let me just make this a little bit, that's too small. So you can see, you can show that this level, this shaded area on the 1 hour chart represents the downtrend. On the 5-minute chart, every time it hits either the middle Bollinger Band or the top, you keep on exiting, or rather entering positions. Of course, here you would have been taken out at break even, and this one would have been a loss. Okay, well, not a loss actually, it's just break even. But then you go ahead and enter a trade here, enter a trade there. When you're in profit, you put a break even stop loss. In the meantime, you could just remove these trades up here. You have 1, 2, 3, 4, 5, 6. This one was taken out, so that was break even, right? So you have 1, 2, 3, 4, 5, 6, 7 positions open, 8, 9, okay? And you're still in this trade, and you keep, when you're in profit, break even on this trade here. These two would have been taken out. So now you only have 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5, 6, 6 trades open. But those 6 trades, starting with the first one, you're up 81 pips. So that's 81, 58, 50 pips, 40 pips. Okay. It's over 200 pips in a matter of what? Let me see. It's a matter of hours. So this, let's just highlight. This is the level where price retraced and took us out just on this one, not that one. Okay, and let's go back to the 1 hour chart. And that was, okay, that was just about 1 o'clock. The trade took off, and then that was just a matter of just 6 hours. Okay, so that's one strategy. That's how I have found out. I've never tried this on a contest. I have tried this on my own account. It does work amazingly well. You have to make sure that on the 1 hour chart you know the overall direction. Okay, so if, for example, here's a good trade setup where you have a trend line break. Using Bollinger Band, price is below the middle Bollinger Band. We're in a strong downtrend, a trend line is broken, and then you just go to the 5 minute chart, and every time it hits the middle Bollinger Band or even the upper Bollinger Band, you enter another sell position. So looking at a 1 hour chart, look at all the sell positions. Okay, on the 5 minute, the market never goes up or down in a straight line. It will always retrace. That's your opportunity to sell. Okay, and as soon as you're up 20 pips, you put a break-even stop loss. This is difficult to do in a pound New Zealand dollar. You'd have to have more than 20 pip stop loss. Or break-even stop loss you'd be taking out if you're only up 20 pips on a pound New Zealand. But Euro Yen, Euro Dollar, USD Swiss, New Zealand Dollar, this is doable. Okay. I will go over the strategy in more in detail in the Pro Traders workshop for those that are interested. I know many of you have requested more scalping trading strategies. This is an excellent way to increase the number of trades without the risk. Have a good weekend, and I'll catch everyone on Sunday night for the Monday retracement.